Thank you for joining us at XM.com for this Forex Preview video. The latest economic data out of the United States point to a U.S. economy firing on all cylinders, which led investors to reprice the Fed's terminal rate much higher. But can the Nonfarm Payrolls report out this Friday change that narrative? I'm Cristina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, the previous NFP report came in hot, exceeding forecasts. So is it possible this Friday's print will also surprise to the upside?
Hello, Christina. Surprises are always possible on non-farm payrolls, but I would highlight the risk of a negative surprise in this report, and let me unpack that. So last month we got a spectacularly strong non-farm payrolls report. Non-farm payrolls came in at 517,000. Now, this month, economists are forecasting 200,000. That's still a very strong number. And that's also supported by almost every indicator we've gotten during the month. So, business surveys from ISM and S&P Global, both of them pointed to stronger employment growth in February. A reacceleration in hiring, essentially, by businesses. And meanwhile, applications for unemployment benefits across the United States remained very low. So everything points to another strong month for the labor market. Here's the catch, though. Whenever you get a very, very strong non-farm payrolls print, like last month's, it's usually followed by a softer number. So what we essentially see is a correction back to the prevailing trend, in a sense. And that might be especially true this time because last month's print was boosted mostly by one-off factors, warmer weather, seasonal adjustments to the data. Those played a big role in boosting the last number. So I think we have a risk that we see some payback, let's say, this time, and that the non-farm payrolls number is slightly softer than expected. Now if that's the case, that would be bad news for the dollar, but I don't think it would be a game changer for the dollar's trend.
And speaking of the dollar, and bearing all of this in mind, what is the broader outlook for the greenback in the next few months?
Well, I think it's quite bright. So I think the stars have started to align for a recovery in the dollar. And allow me to explain that. We've gotten a lot of strong data from the US lately. Consumer demand, inflationary pressures, the labor market, everything remains very resilient. And that, as you mentioned in the beginning, that has led investors to start repricing how high the Fed will take rates and how long it will keep them there. As we speak, the market is pricing in a peak for the federal funds rate at 5.6%. So the markets are starting to price in a more hawkish, a more restrictive Fed for a longer period of time, which is positive for the dollar because it helps to widen the dollar's interest rate advantage. Now, I also think there are other positive factors for the dollar. So specifically, when you look at pairs like euro-dollar or cable, those pairs have a very tight correlation with stock markets, with the global investment mood. Often you see cable rising and falling with stock markets, for example. Now, I think that stock markets look very vulnerable where they are because valuations are really expensive, corporate profits are contracting, and interest rates are rising, which is a very negative mixture, a very negative combination, a dangerous combination in a sense for the stock market. So I'm negative on the stock market, and if we see further weakness in the stock market, that probably argues for further downside in euro-dollar or cable, since those pairs are very tightly correlated with risk sentiment.
Marios, thanks so much. This was a Forex Preview here at XM.com.